Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some key indices in the wake of this week's tapering fears, which seems to have taken some of the steam out of the latest rally for stocks. Starting off with the Nasdaq 100, where we have a breathtaking rally here since the spring. We're actually apparently only near the bottom end of a rising trend channel from the end of March. The support line nominally towards 3,435 10-day average, and according to this, you'd expect to see much higher prices because we've had a failed gap fill of the October gap to the upside. November could not get back down towards the 3,300 mark, and on that basis you'd be looking for a substantial move even after all that we've seen. 3,800 is the implied target, while this market holds above 3,400 or so. So basically, no real sign of an end to the rally here. Probably the earliest you'd sort of call this market sort of in bearish mode would be if we broke back below the 50-day moving average at 3,335. Switching over to the more broad-based, Dow, broad-based in terms of the sectors which are involved, stocks there. Here we have a classic failure at the top of a rising trend channel from March. We reached 16,174 at best, and now we're back at the 20-day moving average at 15,875. RSI trendline break as well, which is a sell signal, indicates probably down to the 50-day moving average at 15,545, although we might get away with just going down to the September peak and 15,700 or so. So looking like a sort of small retracement at this stage, nothing dangerous, but obviously we do have the tapering fears, and it does depend on how much that fundamental headache starts to sort of damage leading US stocks. Moving back home, we've got the FTSE. This market was interesting that it did not follow the US markets to record highs. It actually petered out around the 6,800 level in October. So the last part of the US gains were not matched here, and that was a sort of a strange sign. FTSE normally is the true market in terms of being a leading indicator, and it was in this situation here as well. You could have been sort of going short of US stocks on the basis that the FTSE was not following on there. The favoured scenario at the moment, really for this market to hit the floor of a rising trend channel from March around 64.50. That would tie in with the 200-day moving average area at 65.08, a bounce probably like the one we've seen in October for the early part of December, and then back up towards the top of the 2013 channel. Say 6,900, 7,000 would be the sort of the favoured destination for UK stocks for the end of the year. That's it from me. See you again next time.